Good morning. My name is Scott Red, the Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing red arrows around the world this morning after a very potent down day in U.S. markets. And although our correction started way before Syria, as that situation is intensifying, it seems as though the correction is as well.
And this corrective process that started probably a month ago has been almost like the perfect formula for the bears. Because if you remember, we started with the taper talk, which is when yields were spiking towards 3 and everyone started getting all up in order about that. And then you had earnings wind down. Some were saying that earnings season, as good as it looked, it really was just cost cutting and buybacks. It wasn't revenue increases. Then all of a sudden, it went from Yellen, who was going to be the next Fed chairman. Now it looks like it could be Summers. So you've had a lot of different things stirring in this bearish formula. And recently, it's really been all about Syria and the escalation.
Why don't you show us a visual then of the markets and where we've gotten to this point?
Okay, well, if you look here, it almost seems like every negative technical pattern started with some type of conversation. I really think right here was his head and shoulders top, and that was all based on the taper talk as yields start to spike. Remember we talked about taking risk off if we give back 1698. Then you saw them defend this pattern here, and a lot of guys actually were looking to get net short. Then I think I did that little funny saying, streaking through a sprinkler. I think we see the 50-day. Well, we saw it. Continued lower a little bit into it. I think this is when we started talking about the Fed chairman and this and that. Got a little bounce, and then this is when John Kerry came out and said we might have some kind of military action, which was your outside day, red dog reversal, take risk off, maybe get short. And then yesterday was downside follow through, and rightly so. Some of the rhetoric coming out of Russia is kind of crazy considering, I think they're saying, Britt, that if we do some type of military action, it could have catastrophic consequences, which are the headlines which people have been reading around the world.
Right, which scares a lot of people. And that military action is said to be a potential missile strike that will be launched on Thursday. So in that case, what would happen to our markets?
You know what? I've been trading for like 15 years, and what I remember, pretty, I would say clearly, is when we were looking to, I think, take down Saddam Hussein, the day that we actually launched the attack, I think we were oversold enough, and we had a big rally. And then it looked like the war would have been over in 4 or 5 days, and then obviously we know how it lingered on and the ramifications thereafter. So, if you go back and look at this chart, I'm not exactly sure what's going to take place when the missiles just say launch. But, we're coming into some bigger support. Obviously, this, more intermediate trend line looks like it's in jeopardy after breaking what this, this accelerated trend line. Remember this accelerated trend line? Broke once here, hit this one, came back up, which was important, and then we kind of digested and continued. So with this one, perhaps we break below this trend line, and then something happens where we do the military strike, and then we'll see, do we do a red dog reversal? Do we, come well off the lows, create a bottom tail at day one, and then maybe see some type of move back up? I'm not sure, but for today, I'm looking at 1629. If we break below 1629, you have 1620 to 1626-ish area, and then you have, bigger support coming into 1600. So in this area, I will look for some type of tactical long, considering that I've taken a lot of risk off, and we shall see, and there'll be a lot of things we need to look at.
Well, there were signs that we could have taken note of to take some risk off, and if you took advantage of some of those signs and did take some risk off, what would be some clues that we could look to potentially put some risk back on?
Well, we could look at the sectors. We could look at the sectors that have led us lower, whether or not some of the bigger, more macro patterns trigger to the downside. Like I just said with the S&P, let's see if we get some type of red dog reversal. We all know what that is. Now, instead of the one that happened 2 days ago where we pushed through to the upside and came back below and closed on our lows, maybe we push down through 1629, go to 1616, then come back above it with heavy volume. That would be a sign to maybe, trade versus that pivot. And then obviously, you look at the leaders and you look at, what they're doing, seeing if they're holding higher or they continue to break lower. So, I'm going to look at multiple signs and then also how we handle the headlines. If they buy the headlines or sell the headlines. Right now, they're selling the headlines.
Right. And one of the groups that gave us signs that we were weakening was the home builders.
Yes, and they've been slowly trickling lower. At first they started because of the rates rising concept, but now rates have come in and they're still not really bouncing, and they're coming into some crucial support. If you look here, look at this head and shoulders type pattern here where you have your left shoulder, your head, your right shoulder, and this is hugging, a big time support. So this is a clue here. If it holds 28-ish and starts to bounce again, and then you see this downtrend that has been put in place here since the highs, perhaps it breaks above it in the coming future. But if it breaks below this area and just gets into free fall, you're not going to see the market bounce, and you're going to see a lot of people talk about housing and whatnot. But ultimately, rates came in, so it'll be interesting to see how it handles this 28-ish area.
Well, and in addition to the home builders, we often look to the financials for clues about market direction. The XLF has been showing relative weakness and had another harsh sell-off yesterday, closing down 2.6% and closing below the 100-day. So how concerning is that to you?
Well, for the intermediate trend, it's concerning, and it's been actually showing weakness. So in a way, it's actually helped us, because by it not showing strength, it's given us clues to take risks down. And we've seen some headlines after headlines with JP Morgan, and JP Morgan seems like the bank in the news, that's helping lead that lower. And if you look here at the chart of the actual XLF, you will see that according to this trend, which appears yesterday, this is one trend that started in November. Okay. It actually broke it yesterday. Never a good sign. So if we can't reclaim this trend line in the next few sessions, because sometimes you break below it, come back above it, then it could see these lows that were put in in what's it called, in what was that, late June, or so right there, and that also correlates to the 200-day. So with that said, this is like a middle here, where if you start too early, you may not stay with it. And then this is a bigger trend line that started May of last year. So with that said, you take a closer look. If you used high-level stops, which a lot of people probably did, as we started breaking below 20, you could then look to this area to embrace in order to find some kind of entries for opportunities. Because again, if you sell things well, you can buy things well.
And we look to the Russell as well, another area that showed relative weakness, dropping 2.4%. But this after showing relative strength over the past week.
Well, it just shows you that, same thing with strong stocks. The Russell has been stronger, but when a sell-off intensifies, they usually go after everything. And right now, this group still is the strongest group, or one of them. You look at it here, and you will see the Russell also had somewhat of a head and shoulders top that it triggered below. Okay, here is your top area, your left, your head, your right shoulder, gap through it, came back up, gave you an area to sell if you missed this one as it retested. And then yesterday, pretty harsh day. So with that being said, here is your 100-day on the Russell. So we'll see how it handles it. Right now, I would write down to yesterday's low as the pivot 156. If it trades through it, comes back above it, the drill there. If it trades through it, doesn't find a friend, here's your 100-day.
And lots of weakness in many retail stocks as well. The RTH shed 1.5% yesterday to retest its 100-day. So what are the spots to watch there?
Same story here. We watch yesterday's low as a pivot, and then we look at levels underneath it. The RTH definitely started to change when we started to see some of the bigger retail names really roll over. If you look here, this is an unbelievable day for people, because this showed you get out of the way. Look at this engulfing bar. This engulfing bar engulfed 5 or 6 days right there with the head and shoulders top formation. That gave some clues to people to get out, which is great, because it's nice to have high level stops, and some get short. And then you had this lower area, never filled the gap, never even tried to fill the gap. So here's your downside follow through. So with that said, closing the dead lows, right down 52.71, and here's your 200-day, and here are those June lows. So again, just like everything else, you have a pivot, and then you have a big void. So the question is, does this void get filled, or do we get a new pivot created? So that's the way I'm treating these things.
All right, coming up, we're going in the trenches with tech stocks, some strong names and some weak names. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches. First with some strong tech names that are breaking upper levels. Stocks like Apple, which has been acting well, but experienced a sharp sell-off yesterday of about 2.9%. Still above its 21-day, though. So that seems like it'll be the key level to watch.
Yes, strong stocks, you stay with them and you watch the speed. And then you also watch the patterns. And we had a flag type pattern building on Monday. It looked like it was going to break out, but failed. Right there, you notice that, you reduce some risk. Maybe it puts you on alert for then, not selling it, but be on alert to have some stops in place. And we talked about this level yesterday. You look at the chart of Apple, you will see that, here was the gap up after earnings. This was a great technical buy setup. Another buy set up through the 100-day. And then the question was it going to continue? But when the market got that pressured, hard for even Apple as of late, to stay unpressured. So here is when it tried to break out and failed. Mini sell signal. If you didn't take that one, you must have or had to take right here, which was about 498. And if you did so, you know what? You missed some of the damage yesterday. So here we are in Apple. Tactically, you could look at yesterday's low, which was what? 486.30. Here's the 21-day. What I'd love to see is a move down to this, be able to buy verse it off the low and for it to come back up and then figure out if this whole range wants to get bigger for a move into the September 10th invitation. But ultimately, here's a 21-day that would also be about half of this igniting bar from the icon tweet. I'd love to see it around here, and that's probably one of my focuses for the morning to see if we can get some type of reversal set up, for tactical cash flow.
All right, what about Facebook, which has been acting well as well, but yesterday slipped all the way down to 39.42 near the prior breakout level. Is this a case where you would buy the dip?
I'm going to look to do that too. And if you sold strength and if you sold when it broke 40.60 yesterday, why not try and look to buy 39-ish? That's, a nice little middle. You look at the pattern here, Facebook been doing very well. This was one buyable setup when it triggered above the earnings high after holding a really nice gap here. It continued. And then look at this upper flag. Just so you know, if you sold it here when it broke below, okay, you had to keep it on the radar because then it found its footing, went sideways, and then gave you a nice buy setup. So with that said, yesterday's low, which is 39.42. This is about where it broke out. Here's some other support. So into this area, it would be very healthy to see Facebook hold. If we could also see a red dog reversal today here, I think a lot of our traders would be happy because that's what they're kind of looking for in the face of some of this volatility.
And since we're talking strong stocks, we should mention Tesla. But unlike some of those other names, Tesla didn't even break down.
No, it's still above the 8-day. And, yesterday it seemed as if it was going to break 160. It didn't. It was a little volatile back and forth. But you look at the chart here, strong trend, great stock, Elon Musk, go for it, buddy. Here's your 21-day moving average. It's been following, touched it here, broke it for a day, which gave you that red dog reversal. Then it consolidated, gave you another buy area from this mid-level. Here was your earnings, came in, tested the 21-day, bounced. I remember that day. That was when the futures were lower and gave you relative strength. Another buyable move right there, and look at it now. So it's still consolidating, still working its way higher. I'd love to see some inside days here to give us a bigger platform to buy. But Tesla, doesn't let you sit around, and you have to be very active there, and it's something to learn how to trade for active guys. And the trend is strong. Do not fight it.
Well, on the other hand, there's some weak tech names that we've been mentioning as good short setups. Stocks like Amazon, which has been weak over the past month and doesn't look like it's going to change its composure anytime soon.
Yeah, we talk about breakout failures, and on earnings it looked like it was going to get a pass, and everyone's getting all upset. Oh my goodness, they rallied it again, but then since then it's been just trickling lower, and every rally has been sold. And you look at a breakout failure, that's right here. Okay, and this was a big one. After earnings, it ignited and then gave it back almost in 2 bars. That's when you could notice that the momentum is not there. If you didn't notice it then, when it broke this 295 area, that was your high level stop, and then since then came all the way in. If you look here, it tried to hang out and hold 285, which was worth a spot to look at, a spot to maybe try and buy, which I was trying to do right around here. But then once this big time candle came in, I think Monday, that gave guys a sell signal, or at least not to be involved here, and there you go. So you look at Amazon, you have yesterday's low as a pivot, 279.74. If you remember, when we played this area right here, which is about 272, this is big support now. So here's your 100-day. That's yesterday's pivot. There's a 200-day. This will be some type of tactical action area again if you sold here, sold there, sold there. Yeah, just look at it here for opportunity if it wants to show it. But it seems as if it's just been weaker and the complexion changed on that breakout value.
Right. And Google, another weak stock showing weakness as well, had some follow through to the downside and closed right near the prior breakout level. So this is the level then we have to see if it can hold.
Yeah, I'm going to watch yesterday's low, which is pretty much what I'm watching with a lot of things. This one also, I remember that day it did an inside. It was like an inside level, but it was an outside day. It looked as if it was going to go. I think it was like 907, and it failed. That was right here. Just goes to show you how you need to be on top of things. Right on this day, you had this nice little flag pattern. Looked like it was going to go, and what happened? It had an outside day from the mid-level. That was right here. These candles mean something. When something tries to break out and it doesn't, which is 907-ish, and reverses to close on the lows through these candles, that's your sell signal. If you didn't take that as a sell signal, what about when it broke this trend line here around 885? Now it's already down to 850. So for active guys, maybe if we do find some kind of reversal in the coming sessions or so, there's your Google. That's the low. Let me give you a clearer picture here. So this was that prior breakout. What price was this? This was 844. Okay, so we're getting close, right there. So we'll see if it holds. Sometimes it tries. So look at this area, see if you see relative strength, see if it trades back above yesterday's low, or we're going to be seeing this 200-day, pretty darn quickly. But overall, hopefully you've been out of the way as this trend has been pretty strong to the downside since that earnings.
Well, and in your 2013 thesis, you said IBM is probably not the place to be. It's been weak since its recent earnings report and broken key support levels. So would you expect more downside in store?
This one, sometimes, you have a thought process, an idea, and then you wait for the market to confirm it. And the last 2 months, IBM's been very weak. If you look at the chart here, you will see, to me, this was a problem spot. Sometimes you want to, have a thesis, and when the market confirms it, you act on it. And if you look here at IBM, it's been starting to break down below what we call major support here into this 190 area. This was your high. Oops, sorry. This was your high, a lower high. This was under the moving averages. Your last time you could have gotten out at 195. I think even had an area right around here, around 190, and now it's just, it's on its way lower, which is helping the indices go lower. So next real support comes in probably around 178. Look at the monthly chart. That's where I kind of got it from too. It's just starting to break below this key support. And then here is where the moving average is on the monthly. So, if we all of a sudden in the next 6 months hit 167-ish, I don't want people to ask me, how did this happen? You had your clues right there as it broke through this macro support line.
All right, we're going to do some quick hits here and talk the TLTs, which have had a 4-day bounce, 1.2% gain yesterday. Does this change your theme of going short the TLTs?
No, because we've talked about being short the TLT, long the TBT. It's giving you like 10 different setups over the course of the past 6 months. And if you didn't want to take the setups, we said put it in the drawer. And if you put it in the drawer, you're not really looking at it. This is a rates rising thesis that I do think happens, but it's going to get into some areas that are tricky. If you look at the TLTs, you'll see it turned into a little bit of a safety play because of what's going on in Syria. If you wanted to cover, right when it cleared this lower pivot, this was a spot. If you were playing for a tactical bounce, this was your trigger, and now it's coming right into resistance. So if you bought it here, I would be a seller into this 107, 108 area. If you want to try and re-short it, be my guest, but what I'd rather see you do instead of shorting that there, maybe look to rebuy the TBTs back somewhere into this, 74.5, 75 zone, which is right where the 50-day is, especially if you wind up using a high-level stop as this bull flag resolved to the downside, not the upside after a massive move that we've seen since the gap here in May.
And meanwhile, geopolitical fears continue to drive up gold. Gold rose yesterday with nearly a 1% gain. How much upside is there left? You've said the majority of this move could be over.
I think so. You know me, I like to eat the meat and the potatoes and save the juice that gets slippery for someone else. Well, you look here at gold. This was your spot to, to tactically get in, which I guess was the perfect spot on this red dog reversal around 115. I think some people rode it into this resistance, and then if you got out, okay, then it triggered above this downtrend, another buyable spot, And, here it is. It's still tacking on some gains, and if you want to play it for that, okay, here's your 200-day moving average, here's some bigger resistance, but just I would be a little careful, because if something does happen and gets resolved in Syria or whatever, it could be the end of that. And we know that it has been in more of a macro downtrend since breaking this 140. It might even be able to get up and retest this. So who knows? But ultimately, I actually bought puts on the close yesterday for a cute trade, but very small, and we'll see, where it stalls, if it's going to. This was, your exit right here when this intermediate triangle broke to the downside, or when the macro support broke. So if you were able to take advantage of this long side trade and you're still there, congratulations. I would trim some here.
And like gold, silver extended to the upside yesterday with 0.5% gain, so cautious here as well.
Yeah, we talked about it being a better buy into 18 versus sell, and now I think it's a better sell into 24, 25 versus a buy.
All right. Well, what will you be focused on today as we begin the trading session?
Just want to see what's next. We know there are things we know and things we don't know. What we do know is that this corrective process started about a month ago. What we do know is that we're about 5% off the highs. What we also know is that some trend lines have been broken. What we don't know is what real effect the markets will have when the missiles get launched, if they get launched, what will happen thereafter. So I'm going to trade levels versus levels. So if I get little paper cuts, it's fine. It's not a gusher. I'm going to know where the 100-day and 200-day moving average are on most sectors. And I'm also going to know where the prior day's low is on whatever I'm trading, because if we break below it and then come back above it, maybe you do a tactical buy versus that low, so it's calculated, you know what your risk is, and then you try and play some type of bounce in a situation if you sold it a lot higher using high-level stops, or you sold strength.
All right, and that's your morning call for this Wednesday. Happy trading. Have a great day.